Good morning, everybody. Ladies and gentlemen, boys and girls, everybody, welcome back to the Daily Live Stream. Quite a few quite a few stocks popping up this morning. To be honest, couldn't really catch anything this morning all that great. Um, so just another pretty much not doing a whole lot, which is okay. Just is what it is. Market's not really doing a whole lot, pretty much just chilling flat, mainly sideways over the past couple days. Well, really day and a half, if you will. So nothing super duper exciting there. Yeah, I guess we'll just wait a couple minutes here until some people hop on in. In the meantime, gonna get a coffee. So I'm gonna do a little R B coffee. Hello, ladies and gentlemen. We are back. We are back. Understand? Go. Do 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 do. Psh, do 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 do. Psh. Yay! Really, really busy, fun morning here. Let's go, baby. Gotta love it. Gotta love it. Yeah, I mean, what we just saw right now is the market SPY pulling back. Don't really know why. I don't know if it's something news related or economic data related, but ultimately it's popped the volatility index up enough to start breaking out the 30-minute 50 SMA. So market's getting a little bit of a little spooked right now. So we're gonna be like hands off longs right now. We're gonna wait a little bit. Might be a little soon, but upside investing. Good morning. Yeah. So we're not as long biased this morning since the past couple minutes, if you will, just because the VIX is starting to get priced over $17. So, you know, we'll see if the VIX is lying or not. If the VIX is telling the truth and holds over the 50 SMA, then the market is going to kind of pull back a little more here. But yeah, we'll see. I mean, ultimately, VIX will need to hold over 17. If it doesn't, we're going to buy this bottom or this pre-market low, if you will, and the market's going to bounce as the VIX comes back to back test 17. So let's just bring that up real quick. 1 second, guys. I got a phone call coming in. Yeah, there we go. Sorry, back on. Here we go. Yeah, so what I just said there while I was accidentally muted was I'm not long the market anymore. I've closed my 3x leverage long this morning as the VIX started to get over 17. It's pretty much a cautionary move. With the volatility index getting over 17, starting to arguably break up a little bit. It's starting to suggest that maybe some fear is creeping into the market. So I've removed that position. Now kind of just on standby, if you will. Um, so what I'm seeing this morning with the volatility index is kind of like you're coming into a yield sign as you're driving your car. You're supposed to slow down, look both ways, or we're potentially the stoplight is going to turn yellow from green to yellow. That might end up being a red, and the market rolls. We'll find out. We don't control the market. We just listen to its signals. So this morning, the market's kind of signaled to me to be a little cautious. So that's what I'm being. And we'll see if that caution ends up becoming a full-on protection or not. So, like I said, volatility index is starting to express a little bit of fear in the market. Therefore, I'm going to be cautious. I'm not going to be as optimistic on the long. And we'll just have to see what happens, right? And what's going to happen. I don't know. I mean, either the market on the VIX is going to keep going up, market's going to go down, or the breakout on the VIX is false and we're going to have to back test it. You know what I mean? So it's all the same rules as it's always before, right? If the VIX is going to break out and the market's going to go down, VIX has to keep going up, right? If the market is not going to break down, that means the breakout on the VIX is false, and we're going to see it pull back, and it's going to go back to 17, and then it's going to decide if it wants to hold 17. If it doesn't, then it's going to go under, and the market's going to hold up, and then we're going to bounce, and blah 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 blah. Right? So it's just a day where we're seeing a little bit of caution, not quite enough to probably break the market down. We'll probably end up bouncing, doing like a counter bounce in this area or something like that. And then maybe later the VIX will tell us. But arguably, it's just a cautionary morning. Like I said, I feel like it might be too soon for the VIX to actually break out. So I don't think that we're going to see the market break down right away. This is maybe just kind of early, if you will. So let me bring this up real fast. The VIX, that is. So there we go. Yeah. Yeah. So let's just go to a regular trading hours chart. Pop this bad boy up like that. All right. So pretty much there. All right. So this is the VIX, and right about $17 is where you guys need to basically focus. So this morning pre-market, we've broken out and over. So ideally, if today the market stays over 17 and the VIX breaks out, we're going to pull the market back. Right? So we've broken over 17. Right? If the VIX stays over 17, we pull the market back. Right? Um, if the VIX even remains over 17, we may not have to pull the market back, but we're not going to see like a bullish trending day. Because if the market does continue to express fear, that means we're all anyone who pays attention with, what we're doing here, we're going to be a little cautious. We're not going to be as optimistic on the market. And since we're not going to be as optimistic on the market, that's going to lead to less buying optimism. Less buying optimism would lead to less of a trending bullish day, more of maybe a lackluster kind of pop to short, pop to roll, kind of scummy down day, if you will. So I'm not planning for an extremely bullish day for the moment. The only way I might flip that idea, like that bias to actually bullish, is if the VIX ends up re-breaking down 17, at which point we might see like a bigger kind of bounce or something like that come to. So it's really just all up to the market on the volatility index, what it wants to do here. So, like that's pretty much it. Eyes and whatnot, and focuses on the volatility index. And that's pretty much that. Mm, 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 mm. Yeah, yeah. So I had to take a small loss this morning on my last few shares that I kind of averaged in and bought up on the long move of the market as the VIX started to come down below or go up above 17, excuse me. So, yeah, because I kind of bought the dip a little bit the other day, sold some, bought some, sold some, and then had a little bit on, and then this morning, as the market just got smacked and I saw the VIX break out a little bit. I'm like, no point of holding any shares on this for the moment. Might as well just be cautious. So that's what I did. As soon as I saw the VIX go up, I just removed the last little small bit of shares I had. Generally speaking, I have the most shares on any sort of swing trade position the day that we're starting to transition above or below the 50 SMA. And then as the days go on, I'll usually close them out or kind of buy the dips and try to make a little bit of extra there. But so this last trade really didn't work in the sense because we just got smoked this morning for reasons that I don't really know why, nor do I really care. I'm just looking at the volatility index and it's telling me to be cautious right now, so that's what I'm being. So again, like you guys can see over the past couple days in the stream, what do we say? Just long bias, long bias, long bias, long bias, long bias, right? And what do we always say? The day that the volatility index starts to break out or the market starts to break down are the days where we might transition to bearish or we're going to be cautious, right? So we stay long bias the stock market until the stock market tells us not to be, or until the volatility index tells us not to be. This morning, the volatility index is kind of telling us to chill out on the long. So what are we doing? We're chilling out on the long. And you guys are all here for it, right? So I think it's still too soon to suggest that the market's just going to get smoked. I don't think that's really going to happen, but I don't think um, we're going to have like a bullish day. Like I said, pretty much as long as that VIX is over 17, it just means caution, and that caution can turn to a harsher pullback, arguably. And actually, now that I'm thinking a little more, using my brain maybe, we gotta look at where the 50 SMA is at on the market. This might have been honestly, I haven't even looked, but this is probably the 50 SMA right here, to be honest. I wouldn't be surprised. I'm not gonna say for sure, but I don't know exactly where it is, but I'm gonna say there's a good chance this pre-market low is probably a 50 SMA, but maybe not. Let's see. Um, I haven't looked this morning. Let's see where are we at. 30 minute. Nope, we actually might be breaking down the 50 SMA a bit. So we're right there. I kind of forgot to check this. So, well, I mean, it is kind of true. I mean, we broke out the VIX, sold the market down to the 30. All right, cool. So pretty much we had the volatility index breaking out this morning, and now the market has transitioned below the 50 SMA. So that's why we're kind of not bullish anymore. So, number one, the VIX broke out, slams the market down to the 50 SMA. The 50 SMA breaks below. Now the market is below. So, if the market wants to sell off, it's going to do like that, right? If the market doesn't want to sell off, then it's going to creep up, it will recover, and then it's going to go like poop, like that, etc. So right now, algorithms in real time are reading the VIX. They're looking at the SPY and they're pretty much going, okay, we know the VIX is breaking out. Fear is starting to get expressed in the market. Is the fear legit or is it not legit? If the fear is legit, we're pretty much going to roll the market bearish. If the fear in the market isn't quite ready, what's going to happen is algorithms will reshift above here and then we get a pop, right? Arguably. Um, so that's how the market's set up today. Basically, how I've just drawn it on the screen. All right. So we are cautious, right? We're not suggesting the market's just going to roll over and die. You basically need the volatility index to stay fearful. Um, you know what I mean? Because you can have like moments like this where we use the VIX, send the market down to the 50, do a little fake breakdown of the 50, and then we go through like a short-term long, bounce the market back up, and then we break it down later. So we might just be seeing kind of the early phases, right? But not a true rollover. All right. So I think we're kind of in the early cautionary moment of the market that may progress to a sell-off. All right. And yeah, and there's been many a times too where, we see the volatility index break out, kind of like it has today, and then it just gets sold back into and we just relong the market, right? So it's kind of one of those things where you know, right when something starts to break out, it's always kind of the moment where it's still needs a back test kind of thing, right? So we've broken the VIX out, so the VIX is going to just have to straight break out this morning and just keep going, and then we will throw the market down. If it can't break out, keep going, then the most likely thing it's going to do is try to back test its breakout level, and that's 17, which means right now the market's priced at 17.20. There's a 20-cent decrease potential on the VIX this morning. If the market does go for a back test on the VIX, 20 cents backwards, then we're going to use that to basically push the market on the SPY back to 662, if not higher. Um, and then once we do that, we will give the volatility index its time to tell us whether or not it wants to hold its back test to $17. If it does, then we will top the market again on the SPY and roll it down. If the VIX does not want to hold 17, then we will continue the bounce and so on. So right now, we're probably going to be looking for the SPY to go back to the 50 SMA this morning. So that's how I'm leaned. I'm leaned for a counter long push on the VIX, or not the VIX, sorry, the SPY, like back to here first. That's always first thought. Whenever we get a breakdown on the 50, we're always looking for a back test, generally speaking. So that's pretty much my assumption is that we're going to be going for a back test of 680.62 or higher. And if we don't, doesn't really matter. But yeah, and that's pretty much that. And yeah, what time is it? 9:26. I'm gonna hit the bathroom real quick and I'll be right back. All right, there's our short-term counter trend, long target, as just discussed like 2.5 minutes ago. Complete. Job well done. We've just predicted the largest globally traded ETF in the world once again. Whee! Do, 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 do. I actually tried to buy some UPRO there for just a quick kind of long up scalp and well, it didn't get filled. Story of my life. But no big deal. Again, it really doesn't matter. The shit, mm, stuff. This stuff repeats all day, every day. So it's like, when you miss a trade here and there, it's like, well, whatever. It's just going to repeat again. So yep, there's that. So yeah, this is where the market, as far as the SPY, gets to decide if it wants to stay below. If not, we're basically this is where a little algo pop can happen. So again, it's not either way. You guys get the point. It's just always over under 50 SMA. Holy cow, the phone calls are going crazy this morning. Hold on one second, phone call coming in. Okay, sorry about that. Was on a phone call. Anyways, market's popping up into a little bit of a long here, as we've already discussed. If the SPY is going to recover the price of 680.62, you'll see a little bit of an algorithmic long. That's exactly what you're seeing right there, ladies and gentlemen. It's pretty straightforward, pretty simple. Like we said, it's a little early to say if the market's really going to break down because it's just the first move of the volatility index over the 50 SMA. So that's A, why we would look for the counter long two. 50 SMA, then once over, an algorithm pop, because that's just how computers and algorithms watch and trade the market. We don't, they don't care about your bull flags, your head and shoulders patterns, or whatnot. They just care about algorithmic, simple moving average calculation levels along with Fibonacci, etc. And obviously a couple other things in there too, but you get the point. That's why the little basketball dude, his feet are right on that line because that is the level, right? So you can clearly see it's clear as day, right? Ready? Down below, right to it, hesitation, doink. Again, that's algorithm level. All right. Now, as we said before, um, it's all going to come down to the volatility index. So right now, the volatility index is actually below the 50 SMA, so fear is not truly being expressed this morning, so it might even still continue bouncing. Oh, why did you do that? I hate when it moves all my charts. But anyway, so here real quick, you can see what's going on. So we started this morning over the 50 in the pre-market, and now we're below. So the fear is basically false this morning, not totally legit. So market's probably going to bounce for the moment until fear starts to get re-expressed, if you will. Where the heck is? There it is. There's that. So let's see. There's that. There's that. So, and that's not entirely true. I mean, there's a lot to it. Something else we're watching is the VVIX. So this is the other thing. If you look at VVIX, VVIX is breaking out. So essentially, the smarter players are a little concerned. They're more, I'm saying like, look at the VVIX means smarter people are anticipating that fear might rise, even though if you look at the VIX, it hasn't quite broken out. You see that? See how we're just trying to get over the 50 SMA? So, in terms of true expression of fear, it's not quite in the market. But if you look at the VVIX, the anticipation of fear is already breaking out. You know what I mean? So the smarter players are still a little cautious this morning for the market, but ultimately with the VIX being below the 50 SMA, again, we're probably not going to be seeing the market get sold off too harsh here. So, yeah, just keep that in the forefront of your mind. You should be watching VVIX, volatility index, and you're gauging the market based off of whether or not that's going to break out or not. Personally, I don't really think it's going to break out, but we'll see. And if it doesn't break out, like I said, this just turns into basically a bounce on the market. Where is my everything else? There's that. Good morning to you guys. As far as penny stocks go, I didn't really come across, not that I didn't come across, there was definitely some movers this morning. But again, like I said, in order to catch a penny stock, but also just any stock in general at the right moment, usually doesn't happen. It's very challenging to get that. QCLS is a penny stock that's moving well this morning. Um, I thought about buying it earlier this morning, but there literally was no news on it at the time. So I couldn't really justify why maybe it was up. So I just kind of avoided it. Turned out to be a good trader. So just kind of one of the missed ones today, if you will. And then aside from that, everything else is just kind of meh, as it usually is. Well, not as it usually is, just like the past week, we just been in this little slower grind state. So I wish I wish I had a little bit more to say, maybe not, but yeah. Like I said, the market's a little cautious this morning. Like even though we're bouncing a little bit here, the VVIX is still broken out, right? The VIX isn't expressing fear, but there's some slight hedging going on. Now, if that hedging doesn't come to fruition, this is just going to turn into a bounce, essentially, obviously, right? Like duh. Um, Something else we can, I mean, can follow 1 minute volume weighted average price up here. That's another little small tactic for micro traders, right? You could follow this and pretty much call this your 1 minute over under support trend. Above that's okay, below that's bad, blah, blah, blah. Like I said, it's just not a morning to just be slamming longs for the moment. And that's mainly because there could be some slight hedging going on in the market, which means not super long buys for the moment. Granted, if the VVIX ends up just selling off and going for its back test, then the market's going to bounce, right? So this is what I'm talking about here. So right now, you can see the VVIX is broken out over the 30 minute. Let's go to a 1 minute here. So if this doesn't just kind of break out, just go, right? Then it's going to pull all the way back down to 93. So as the VVIX pulls down to 93 for a back test, we're going to look to bounce the market essentially. So it's just kind of, it depends if those that are trying to express some fear and hedging in the market are correct or not. I don't personally think they are. I think the market's probably going to bounce a little bit as the VVIX goes for that back test. We'll see. I don't know. It's kind of sketchy. Um, this is not a great setup day. This is not, it's one of those days where it's a sort of confusing. And what I mean by that is everything I just said, right? There's some hedging going on. You know what I mean? Let's look at our market internals. Market internals are doing, I don't know yet, but let's find out. Where is, I hate that. I'm just gonna, but then why is it? Oh, maybe because it's there? I don't know. Not that, who knows? Silly. Yeah, like honestly, most of the market's actually going up this morning, right? So if you look, right, you have the New York Stock Exchange going up. You got a little bit of green here on the Mag 7. You got some green on the S&P so far. I mean, arguably the market internals are positive, but look at the market, right? So look at that. You can even see, look at how the market, everything's actually going up. Volume on the market's up. This is up. This is up. Even some of the FANG are up a little bit. But the market is not really doing that great. And all I can say is we can see that the smarter traders in the market are expressing some degree of caution and what the hell am I doing? Yeah, caution and maybe some hedging going on, right? So it's just one of those situations where you gotta kind of let the market play itself out. Personally, like I said, I just don't really think the market's going to break down quite yet because arguably, we need the VIX to break out, and we may need some more confirmation on the VVIX. So, not really in line with the market just breaking down, right? And also, my dog's in the background going crazy. He just, just a little yelper he is. So, like I said, I'm kind of just hands off this morning as far as the SPY goes. Like, if it ends up bouncing, turning into a great long cool, I'll probably end up missing a good portion of it. I just, like I said, I'm just kind of chilling. There's too many uncertainties in my head to just just be slamming the market long or slamming the market short right now. We're not at the start of a buy signal, but we could be at the start of a bouncer Magoo. You know what I mean? So, yeah, that's my boy. That's my precious boy back there. Good old Yelp. Sorry guys, Mike was muted there. I was waiting for my dog to stop barking and going crazy. Yeah, so like I was just trying to say to you guys, today's a funny day, right? So like let's just think about it, right? Obviously, you guys have probably heard advancing declining issues, whether it be by me, the stock market, and CNBC or something. So you've already heard that you can look at advancing declining issues of the market, blah blah blah, blah, right? So right now, today we have most things advancing, right? If you look at S&P issues are up, Magnificent Seven sideways, New York Stock Exchange issues up. All the market's done is pop up a little bit, and now it's started to roll over a little bit. So this is the perfect example of where, the academic studies, if you will, and the generic way of teaching advancing declining issues isn't enough, right? People say, oh, we'll just follow the advancing declining. If they're going up, then the market's going to be bullish. I mean, true, but what about hedging? Hedging for volatility. What about that, right? Because you see, if you look at the advancing declining issues, look at these are all up, volumes up, S&P up, right? Magnificent Seven sideways, not really bearish. But look at our market. Market's popping and rolling a bit. Why? That's because, as we said before, smarter traders are hedging right now. There's volatility being hedged right now, today, with the VVIX being over the price of 93. So though things may be going up for the moment on advancing declining issues, behind the scenes there is a little nervousness, some potential unforeseen hazards maybe, don't know. But for whatever reason, the VVIX is broken out this morning, and that's, if you ask me, what's causing the hesitation on the market, even though everything else is going up, 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 right? Something behind the scenes is preventing smarter people from just wanting to rally the market, if you will. It doesn't, it's so we're getting what? We're getting this kind of confused, lackluster market because you're not coming up to a street light that has a green light on it, right? Where it says, yeah, go, 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 go. You're coming up to a yield sign. You're coming up to a light that's transitioning to yellow. Maybe it goes back to green, might go to red. We're kind of all trying to figure that one out ourselves, all right? So, like we said, this is probably before the open. We're not looking for an extremely bullish open right now. We're not really looking for an extremely bearish open right now. That's just not how the market is positioned. It's positioned for basically what you're seeing right now, a scheme, right? So what are we reading? We're reading that there's some hedging going on, right? So there might be some tailwind risks to the market that people don't quite see, that hasn't yet been expressed, right? Let's say that someone in the know knows that Donald Trump is going to come out today and tweet something that could scare the market, right? So we're starting to hedge for tailwind risk. But that tailwind risk has not yet been fully expressed in the market because the VIX hasn't truly broken out. You see what I'm saying? So if you see how the VIX on the screen is priced below that SMA, that's because fear has not broken out and fear hasn't truly been expressed. But we are starting to see the anticipation of potential expression of fear to come. That's why this is up. So again, this is the early yielding. We don't know why, because we can't predict everything that's going to happen in the world outside of our control. So we don't know. But we do know is that for some reason there's a little hedging going on. There's a little tiptoeing around the market this morning. And we also know that that uncertain tiptoeing around the market hasn't caused fear to truly be expressed. So we're not truly selling off the market yet. We're kind of in this in-between phase. Is something about to come? Is the market just kind of overreacting right now? We're just going to end up turning this into a bounce. We're kind of don't know yet, right? So we're just waiting. We're waiting for a little more confirmation, some things to make a little more sense, right? Hope that all makes sense, ladies and gentlemen. I hope that gives you a clear understanding of why our market is the way it is this morning. And then mind you, right, we're right on the 50 SMA, right? Let me just double check the VIX or the SPX. Actually, we're not right on the 50. Oh, the my bad. This actually broke down. Oh, that's support there. Yeah, and then So we've actually already broken, well, that's debatable. This is trading view. So we might have already broken down the 50 SMA as it relates to the SPX. And we are kind of slightly below. I have to adjust. So that's that right there. All right. So we're kind of broken down on the SPX already, but that's the thing is though the SPX broke down, the VIX isn't breaking out. So it's not a confirmed breakdown. So let me explain that too real quick. So if you look at this chart here on the SPX, and let me just delete all this stuff, right? You can see what? You can see that the market is priced below the 50 SMA. So normally you go, Connor, doesn't that mean the market's bearish? Well, in theory, yes, it does mean it can be bearish. It means we're not really long bias, so that's for certain. We're not really long bias. It could turn into a breakdown, but the only way it could turn into a breakdown is if the market actually gets fearful. So look at this. Oh, stupid computer. Why do you always do that? Whoever designed that should probably be fired. All their pay taken away from the past because it is just anyone who came up with that is just not it. All right. So basically, you can see the market is below the 50 SMA if I zoom in a little bit here. Like, right, you can see the market's below the 50, but the VIX is not over the 50. So that's kind of unconfirmed, right? Now, if the market starts to sell down enough, we will start to see this breakout. That's where market's going to get a little more fearful. We might see a little bit more of aggressive pulling back, etc. So there's, look at that. See how we just flipped the candle red? Let's see how the VIX reacts. All right, see how the VIX just pushed over the 50? So now we're getting a little bit more fearful. Let's see if this progresses to an actual like true drop, right? So we'll see. We'll see if this gets progressed into an actual sell-off or not. And then this price point that we're at right here is important because that was the last 50 SMA bounce. So you see how the market bounced the 50 SMA here? So algorithms and computers use that price point as a bounce. So that means algorithm and computer stop out levels could be right about here at 6812, and or them trying to hold their previous dip support level. So very interesting moment for the market we have here, because it's again, it's one of those days where we could be seeing a transition. Most of retail traders would never have a clue that we could be transitioning markets bearish here today. They just have zero clue what's happening. Um, so and I'm retail too. So just call me like, you know, retail with like, one more IQ point, if you will. Not that smart, um, but yeah, the average person, especially the person who just started watching the markets, this week has no clue this is going on. Someone who's been watching the market 10 years probably still doesn't know what's going on here. They're still looking at their patterns and whatever. So yeah, again, very interesting. We're still holding the previous algorithm support at about 6,812. As it relates to the SPY, that would be, hold on. Oh, that's not gonna work. Gosh darn it. That's so lame. So lame. Sorry guys. Let me just bring this up here, regular trading hours. So if you look at where did we last bounce the SPY? Well, where was the last SMA bounce? Right about there, or arguably right there. So I would use that as a forward projecting support, if you will. So you guys always hear me, don't look left on your chart for support, that is true. I do it sometimes, but my supports are found based off not only some of them. My supports I look for is previous SMA holds because algorithms buy on simple moving averages. Retail buys off of previous patterns they think were developed, right? So, this past bounce area in the market, if you will, let's use this one because that's where price is at right now, right about there. So that previous SMA bounce there, right? That's where I would say algorithms and computers supported the market. So then when you come over and the market breaks down today, where does it go? It sells directly off to here, which is that previous SMA bounce, which would be previous computerized holding support levels. So we would look at this price point of 69 or 679.86 this morning as arguably computerized algorithmic previous bounce support level. So those algorithms that bought this low point yesterday or a couple days back, they don't want to go below there. So that was their kind of defensive hold. So if you think about it, right, the market is breaking down a little bit today. Okay. We've broken down. We have not broken down the previous algorithm support created from a couple days ago, and the volatility index has yet broken out, so the market isn't truly fearful, right? So when you think of, oh, should the market break down? Should it go down? It's like we don't truly have everything lined up yet for the market to break down, and then the news to shift bearish and tell you that the market is broken down because Donald Trump pooped his pants, right? The market will break down when us traders and those that are in the know want it to break down. And when we break it down, we will sell the market. And when we sell the market will decrease in market capitalization. When it decreases in market capitalization, that can happen in a numerous amounts of way, whether we shed market capitalization off of big tech stocks, healthcare stocks, et cetera, et cetera, et cetera, it doesn't really matter. The market will shed its weight somewhere. And as a result, the news cycle will flip bearish. They may say it was because of AI not coming to fruition, or it was overvaluation on Nvidia, overvaluation on AMD, because the government maybe is going to shut down again or isn't going to shut down again, and who knows what, right? Whatever they want to make up, they'll make up. But the reality is the market is driven by those that basically know how to move it. And that's all it comes down to. Money comes in, money goes out. Money comes in, money goes out. Stonk go up, stonks go down. Stonks go up, stonks go down. As a result, the news will follow. News will say whatever, right? So right now, we're just kind of in that situation of does the market actually want to break down or does it not? Is this going to be a false breakdown turned back into a long? Or are we getting ready to clap everyone that's been long the market for the past week? That's why I told you this morning I'm not long the market anymore this morning. Why? Because there's too many mixed signals. I'm starting to see hedging of volatility. Maybe the fear is going to break out. The market's below the 50 SMA. We need something else to shape up to be like, oh, yeah, let's go back long the market. Right? When would we go back long the market? Arguably, when those that are hedging on the market stop hedging. Right? So if we end up seeing the VVIX break down, right? If this ends up doing this, coming down, and then breaks down, yeah, that would probably cause like a short-term long move on the market. Everyone that was scared this morning that was maybe hedging takes their hedging bets off and the market pops, right? So that doesn't always work out perfect, if you will. Markets always do, but that's something I'm thinking about. It's like, okay, maybe when whoever's hedging the market stops hedging the market, we'll get some long bias movement back in the market that's more reliable to try to trade into, right? So that's kind of where my brain's at this morning, is just hesitant. I don't quite see the reason to be full-blown long nor full-blown short. I think we need a little bit more confirmation in a few of these markets before we just start throwing money around, right? I know that was a long-winded explanation, but yeah, when I'm talking about this stuff with you guys, when I'm reading price action, I mean, in my brain, those are all the things that are going on, all the things that I'm looking at to basically read psychology and understand the markets and how we're positioned and why things aren't moving the way they're moving and so on and so forth. Granted, do you need to learn all of this? No, you probably could do just fine by trading a couple Fibonacci's if that works well for you, but over the years, this is kind of how my brain's developed, and now I just can't see the markets any other way, really. So you see how the market just kind of popped up there a little bit. So I would just see that as short-term traders getting taken out, right? They're trying to be bearish below the 50 SMA, and again, we don't have fear expressed in the market, so they kind of getting pushed out, arguably. Hmm. So if you guys were asking any questions, which you probably weren't, uh, I see them as fibs only. What's up, Crypto P? Been a while. How you doing, brother? How you doing? Yeah, so that's pretty much what's going on this morning. All right. So if CNBC is telling you it's because of NVIDIA, just turn it off, delete the app from your phone, and give it a 1-star review. Oh, by the way, I know that this is most likely the same people that were watching the stream yesterday. Remember how we talked about Bitcoin and we pretty much said what? We said it's got a long target back to like 91,000 and some change, whatever, whatever, right? And I was mentioning I didn't really think it was going to sell off too much. It would probably end up holding somewhere up there as support, etc. And as a result, if the market would stay up in the 90K levels, we were going to see the news cycle come around and basically cheer it on, right? And so, obviously, what ended up happening is if you were to go to, what am I doing? Yeah, Google. So again, pretty much as we said before, the news followed our trade as it always does. So if we go look at the news for Bitcoin, Bitcoin news today, let's see what it says. Actually, kind of, well, just that was just Bitcoin news in general. Bitcoin news today from, yeah, there we go. So I'm gonna bring this over real quick. You guys, again, you guys see this all the time. But basically, oh, Bitcoin rockets back above 90K. Oh, who would have thought, right? Who saw that coming? Just us here, obviously, because this is really what we do all day. This is arguably what we get paid for. Bitcoin surges to 91,000, obviously. Oh, by the way, guys, the market's popping up long, whatever, whatever. So, like I said, you can now, so ready real quick, you see what's happening is we're starting to see the VVIX pull back. We're starting to see long pressure on the market. I think whoever was trying to be bearish this morning didn't have quite enough knowledge of the market, arguably. They're starting to get forced out now. We're going to drop the VVIX back down to about $93. Arguably, we could hopefully, best case scenario for the moment, look to stay long the market for as long as it takes to get VVIX back down to its back test. That would be like a perfect scenario is watching VVIX come all the way down here to this SMA at $92.94. As a result, the market pops up. Market's already popped up, but sometimes they'll keep forcing markets up for as long as it takes to get say like the VIX or the VVIX to back test a specific SMA because that's how algorithms talk in real time. Yeah, so all of that. Hopefully that made sense. So yeah, there's that. So VVIX pulling back. Um, yeah, so there we go. Bitcoin drops to eight. Oh, that was the other day. But anyways, you guys get the point. Well, actually, let's go take a look at on news. What about if I go to all? Let's see. Bitcoin price today leaps back above 93K amid regulatory optimism. So now it's the regulatory optimism that's driving the price back to 90K. It has nothing to do with the markets just perfectly just pissing people off who trade markets, right? No, 93K, 92K was a bunch of volume weighted average price from previous market participants. Logical thing would be to go back and screw them over, make them all mad. That's what we did. As a result, price goes to 91, 93K. And then people at the news organizations have to figure out why, because they don't know why. So then they go, oh, yeah, there's some regulatory stuff that's going on behind the scenes. That's what it is, because of the optimism. Gotcha. Hilarious. Joe Lopez. Watch the stream because I've always enjoyed the talks. I'm a profitable trader full time thanks to you. However, I just used a 4 hour standard deviation line. Um, yeah, I still use a lot of that behind the scenes. Now, my question for you is, do you use it more of like a swing trading approach? Is that kind of how you use it? Do you use it for short-term day trading? Giving me some more insight. I'm very happy to hear that my strategies helped you turn profitable over the years. That's a beautiful thing to hear. Yeah, I'm always interested to see how, because sometimes people take my, strategies I've taught over the years and kind of redevelop them, if you will, a little bit. Yeah, I was gonna say some of my favorite trades ever come from standard deviation -3, like when the market goes through a correction or the market's selling off. Some of my best trades always come around the -3 standard deviation, -4 stock market, but those sell-offs don't happen very often, but when they do, they always end up being really, really good. Nice. You don't swing trade? Oh, I use it as a day trade in the MES and MNQ. Oh, very nice. That's amazing. Huh. That's funny. Damn it. I knew I should have bought. I just have not been on my game lately with some of these penny stocks. It just kind of missing a few, just not having the greatest of entries. But then again, that's how the game's designed to be, so I can't really beat myself up. But also I have significantly more winners than losers over the past year, regardless. So guess at the end of the day, I can't actually be mad, even though I'm still feeling mad. It's a funny thing about trading. It's not really that like losing money makes me mad. It's I don't like being wrong. And it's a funny thing, and I hate being wrong so much so that it's hindered my ability to grow in trading at times because I hate it so much. But it's just nature of the game, really. Hmm. Interesting. Yeah, because I was gonna say, arguably when it comes to the standard deviation for like MES or SPY or whatever, I mean, you don't really run into the daily or the 4 hour standard deviations all that often. I mean, I guess if it's chopping, kind of the mean, um, but yeah, nonetheless, it's kind of one thing I wish. It's like I wish we would get some more action on the longer term statistics channels with the markets, but like I said, we don't. It's just not something that happens as often. That's why when it comes to like dollar cost averaging too, you should be buying obviously when the markets are trading -1 standard deviation. So you could do like a hybrid dollar cost average strategy where you're always dollar cost averaging into the market or whatever. Well, not whatever, but some people do VTI, VU, whatever, or we'll just keep it simple. Say it's a SPY. You could dollar cost average a SPY, right? And then when it starts to dip below -1, you increase the amount of your dollar cost average, because you're at that point using, kind of like a generic, I don't want to call it generic, but a watered down version of mean variance optimization investing, which is kind of what robo investing companies do, like M1 Finance, Betterment, Wealthfront. A lot of their kind of pretty much most robo advising companies use a mean variance optimization strategy, which has to do with kind of like statistics and so on and so forth, how far something's trading away from the mean of its historical prices and blah, blah, blah. So you can kind of do the same thing, or more of like a simplified, elementary version with just standard deviation on the S&P or really any stock for that matter. And when it's trading below its negative, or when it's trading below zero, or point neg 5 or point neg or neg 1, then you can increase your dollar cost average amount over the long term. It should provide better returns. Well, Until your stock market ends up trading like Japan did for 20 years, just down and sideways, then yeah, you're not gonna really see a whole lot of return there. You're gonna get a whole lot of ass kicking. And that's the funny thing is like here in the United States, you always hear which don't get me wrong, it works great. Now, dollar cost average, dollar cost average, dollar cost average. All right. Dollar cost average in the market, look, you'd be a quadrillionaire. All right. Yeah, we'll tell that to some Japanese kid who's been living in his economy, where it was going, where a bubble popped and was just going down for like 20 years straight. Yeah, like dollar cost average to what? To zero? Granted, now he's finally making a return. I haven't checked the Japanese market in some time, but I know it went through a big bubble, peak, crash, then long consolidation. I think now, or maybe it's moved back to all-time high. It's been a while since I looked, but took a long time for that dollar cost average strategy to finally kick in. But hey, but eventually did, you know what I mean? So it's like the strategy will look terrible when you get caught in a terrible, terrible market downturn, especially if it's the wrong timing. All right, got another phone call coming in this morning. Give me a second, I'll be right back. Okay, I'm back on. Sorry, my bad, my bad. Hmm. Do. That's right. You text the tense. Yeah, all right. Sorry about that. Yeah, I was just sending a text there. All right, cool. What's happening with the market again? Oh, snike. Snike, snike. Right on, brothers. Right on. So, yeah, we're just basically doing this little scummy long move, but yeah. So this is kind of where we're at. So um you see how here on the upper left we have the volatility index, which is not broken out, obviously. And then we have the VVIX here, which is volatility of volatility, which was kind of broken out this morning. So we're kind of like on standby earlier this morning. One might be able to build the assumption if we can get the VVIX to break down below 92.92 slash below 92.81, it would be breaking down the 50 and the 10 SMA at the same time, kind of like a double algo spot, if you will. So arguably, if we can get the VVIX below that price point, 92.79, we would kind of assume that this market's going to continue in a long. So basically, the assumption is if the hedging on the market gets taken off today, then we're going to see this long continue. And the hedging being taken off on the market would essentially be the VVIX breaking down below 93s to 92.80s. If we can break that market down, we should see kind of like a secondary wave of long on the market. And all of my computer screens disappeared again because I love my computer so much. I don't know why it does that, but okay. So we are long the market now. I don't know if I actually bought a little UPRO a little bit ago on this bounce up. I'm holding a little bit only because I think I've seen enough of the market this morning where I think we're going to remove the hedging and we're going to continue this long. And because the expression of fear kind of went away. So again, I put a small long on again, traded up the bounce, and now if they pull off their hedged bets, then we can see the bounce continue. If not, again, doesn't really matter. It's kind of like whatever. But yeah, I mean, let's just fingers crossed they pull their hedge off the market and we get a little bit more of a long to continue today. All right. There it is. There's that. Yippee! Yay! How is that back so far? Funny. Mm-mm-mm-mm-mm-mm. See, that's the other thing too, right? You know, when you look at this, it's like though we arguably would like to see this breakdown so that the market would keep going up. If it doesn't do that, that's fine too. But there we go. Yeah. Yeah. So like that's pretty much it. You're gonna want this VVIX to come down and actually break down, obviously, and the market would continue up. Doesn't have to happen, but it's just one of those things like you kind of have an idea that's something pretty decent that could end up taking place with the data breaking down. And if you look, well, not really if you look. Let's see. This is where the 50 SMA is at with this SPX, and then the 50 SMA is now right there. So we have a little adjustment going on. All right, bang bang a boom, ba dum dum dum. take, well, that's kind of the previous. So like right here. So this is the over under right now. SPX over under. Bullish above, bearish below. So again, this is like it's the market's still just like in its deciding game. So you can see right there. This is bullish above, bearish below as it relates to the system. Hmm, hmm, hmm. And then also this is SPX. So this would be or SPY bullish above, bearish below. Yeah, basically, as long as the SPY stays over that 50 SMA, we'll be fine. And then as long as the SPX ends up, oh, excuse me, breaking out or holding above its 50 SMA, then we'll be fine. And then obviously, if the VVIX ends up breaking down, that would probably seal the deal on the long. If the VVIX does not break down, then arguably we'll kind of stay in this lackluster whatever we're seeing and without much of a trending, flowy-ish kind of move. Oh gosh. Whew. Oh boy. Oh, excuse me. Hmm. Oh my goodness. Another phone call? Holy cow. People, stop trying to get in my god darn pockets. I'll be back.
Okay, we are back on here. Sorry. Yeah, so I know today's been extremely exciting. You guys are just jumping out of your seats with excitement on this market. Most of the penny stocks today have been straight booty. Unclean booty is what these stonks have been today. I mean, there was a couple good moves, but again, you had to basically be up early, catching them in the pre-market. Even I was up a little early, but just by the time I came across them on the scanners and whatnot, they're just too extended. No real good entry points, blah blah blah. Same story as always. Yeah, just one of those days where the market is meh.
And I don't know. I mean, every once in a while, something will kind of sneak up on the scanner that ends up being a good play, but it's like the only way to catch is you just basically gotta just sit here and just freaking type in every single ticker all day long. And see, like there was a decent one. Well, I mean, who would have known that one? That one was garbage. You know what I'm saying? Y'all know what I'm saying, though. Y'all know what I'm saying. Great booty cheeks. Yeah, I might as well have saved my fingers the trouble of typing right now. There ain't nothing. There is nothing that you want to involve yourself with. How's our friend Shitcoin doing? Oh gosh darn it, Bitcoin. Little guy. Little guy. Anyways, so let's get our new targets for Bitcoin going because obviously we've put in a decently established low point, so now we're going to take volume weighted average prices to these lows, anchor them up. That's going to be our next pullback target at some point in the future. So when that is, don't know, but it will happen, guaranteed. So cheers. So just do that, and then you'll pretty much know at some point, Bitcoin's target. Like you guys already know, you with the 8 of you, just put some VWAPs on these lows. You have the Bitcoin targets. Cheers. And our market is still just basically doing absolutely nothing. Figures. Cheers.
Holy cow. Oh, man. Does anybody else just not sleep? You know? It's like, can a brother just get some peace in his life? Just wake up and just work all day long, every day of your life, and then, you get in the bed and then you're just never comfortable. Just no sleep. Just no sleep, gang. No sleep. I mean, honestly, I'll probably be surprised if I live past like 75, realistically. But I should probably like think more positive thoughts than that, or else it's almost certainly gonna happen, right? So no, I'm going to live to 1 million years old. Body is gonna look like a Greek goddess at 75. Yep, so there's really nothing to say here, folks. Just a just a just a boring market today. But it's what we would expect. I mean it just is what it is, right? You got people that were hedging the markets today, which creates a little bit of uncertainty. We're still waiting for the VVIX to figure itself out. Does this thing want to break down? Ooh, what's that? Yay! Awesome. I have no idea. Did Trump tweet something? Did someone say something? Was their economic data supposed to come out here? I have no idea. I don't even really care, to be honest. Like, I could really care less who said what or what was said there. I know some other kids on YouTube are like, yeah, dude, sick green candle. I mean, I guess I'm on YouTube and I'm like sick green candle, but there we go. There it is. Ladies and gentlemen. So, can we all just get a round of applause? 1 second. Let's bring it down. What did we what just happened? Do you guys see how that candle spiked up, squeeze, and now what happens? You see how the VVIX broke below the 50 SMA? So you see how those two things basically happened at the same time. Now, sometimes the VVIX could lead the market. In this instance, you can see that it was whatever just happened. Maybe it was, who knows? I have no idea why that candle was so aggressive there. But as a result, right, market popped up, and then what happens? You can see the VVIX broke down the 50 SMA. So in real time, right, their algorithms basically just made that happen, right? But we could assume, right, if that were to happen, like what would be the result? The market's going to go up, right? So we just see right now, we're seeing the hedging of volatility starting to go away, right? So all morning we were kind of choppy and grinding up, right? Blah, blah, blah. And now just in this last couple minutes, we just saw the hedging of volatility removed even more so from the market. Now, is that indicative of future awesome returns, upward movement on the market? Sometimes, not always. Right here, we saw it happen. Does it continue? We'll see, but it doesn't take a rocket scientist to figure out that if hedging of volatility, hedging of downside tailwind risk is removed from the market, then the market's going to go up, right? Like that's a no-brainer. Now, someone on YouTube somewhere is probably going to say like my SMT divergence fair value glizzy, you know, bullish this and that, mark it up. True, definitely plays a factor, but the more important factor is that those that understand and can actually read multiple markets know that to a degree, tailwind risk volatility was just slightly removed from the market right then and there. Now the market pops. Again, how much of that does it can go for? I mean, those are so many unknown factors, but just that little simple thing in the market right there can give you that little additional edge, which was basically me saying, I think we're going to break the VVIX down. We should kind of be long a little bit here, and that's why I told you I bought a little long, sold a little bit, holding a little bit. Fears being removed from the market. The last thing we need now on this day right now to kind of get in a second additional wave up is for the hedging to be removed from the market, which just happened. I mean, then again, the market could literally like flip back and you know what I mean? Like just because we broke down here doesn't mean this is going to last for 10 days, doesn't mean it's going to last for 3 days. Hell, it could last for an hour and then the market could be back up and above. And then next thing you know, the market gets snapped down again. There's so many variables, you don't know, right? We don't know if this is going to break down and continue going. We don't know if it's going to break down and then go for a back test and then continue going. We don't know if it's going to break down, go for a back test, fail to go down and then break back up, right? Like you just don't know all those things. But the thing you do know is that the market's either going to go up or it's going to go down, right? So if you know where the markets break down, then you know where the back test level's at. And if you know where the back test level at, you know where the re-break up is at, et cetera, et cetera. So cheers, guys. Job well done. That's another day in the books of us accurately predicting the world's largest globally traded ETF in the world. Not bad. Not bad. Pretty good. Pretty good. Cheers. Have a good one, Joe. We'll catch you back tomorrow. Right? Yeah, tomorrow. Ba-da-ba-ba-ba. We're pumping it. Alrighty. Mm-mm-mm-mm-mm. Mm-mm-mm. Let's actually check the inverse Fibonacci strategy today because it probably just happened. And if it hasn't, then I am assuming that's where we're gonna go. So let's see if we do the open, previous day close, and then we're gonna have to do the fail. Oh man, it's been, yeah, we'll do failure to low. We already did that. Well, did that. Hey, let's go, baby. We're back on the long. So now that we've kind of gotten through this morning a little bit and you see what's going on, really the way that you rationalize this, now this is kind of like a hindsight 2020 review. In the moment, did we know that the market, like as soon as the market opened, did we know the market would bottom and then it was going to go up and the day would look just like this? Absolutely not. We kind of had to go through the motions, read the market a little bit, right? But now, hindsight 2020, realistically, what we saw today was the market fail to break down and just get bought up into a long, right? But all of those little details along the way gives you the full story. Why was it that we were broken down this morning? Why did it take a little bit for the market to kind of figure itself out and then go through a pop, right? So how is it that the market developed into this sort of patterning and sort of trade day, right? It was all of those things, right? The morning started with the breakdown, but there wasn't a true expression of fear, so we couldn't break the market down fully, right? So we kind of saw the yield sign where we could have broken down. There was a couple signals, but it was a little early. And as a result, market wasn't quite ready, and now we've gone back into a long, right? Now, if someone was either way, so that's just kind of it, right? There just wasn't enough fear expressed in the markets to break price action down today. Next time around, when there's enough fear and it breaks out, we will take the markets down. It just wasn't today, and that's completely fine, right? I'd rather the market not break down. I'd rather the market always go up, right? Because if it always goes up, then that means my neighbors, people in the world, the economy that are invested in the markets, their net worth is going up, right? And so that's what you should want for any human, right? Is their financial picture to become stronger, right? A stronger foundation for their financial future, right? So arguably, we should always want the markets to go up, right? So whenever we're discussing the option of a market going down, it's really never what we want. It's just what the markets might be telling us. So thumbs up, this is exactly the best case scenario for the market today, which is that it instead of going down, it's gone up, right? We've put on gains. That means my portfolio is doing better. If any of you guys have a 401k, Roth IRA that has any sort of risk exposure to the overall markets, whether single equity, or ETF or mutual fund, then you're probably doing okay today. So that puts you in a better position. So those are the things we want, right? So job well done, thumbs up. Can't complain. Today's a great day. Though the price action of the market may not have been the best in terms of tradability, if you will, overall, those that are invested should be, more happy than they are mad because we had, the potential for a breakdown today. Never really got enough fear to make it happen. And so, us smarter traders, we rallied the market back up. We've saved the market today. We've kept everyone's 401ks in check. Now, you should be very happy. You should be proud that you stepped in to save the entire world today. Even though you may have only put $1 on it, that $1 saved someone's portfolio somewhere. Time is at 10:41. Oh boy. Ooh. Oh. Ugh. Gosh, you gotta love a good stretch. You know, the ones where you stretch and your soul's about to leave your body and go into another realm and then you snap back to reality. Yeah, God, that feels good. Uh, yeah.
So did you guys make sure to share the YouTube stream, like, comment, subscribe, hit the notification bell, print out my YouTube channel on 2,000 pieces of paper, then put those in envelopes and then mail them to whoever? Did you guys do that? And if you haven't, you're not doing your part. All right. You're not doing your part. All right. You're supposed to print my face on a blown up photo with my YouTube channel, and then you're supposed to throw them out your window on the highway, scatter them everywhere. So if you're not getting a speeding ticket or like a fine while throwing those things out the window, you're not doing your job, guys. I will bail you out of jail if need be. I will come and I will save you. And I will bring you some McD's too, because you know you're going to be hungry after getting on the slammer. I will do that for you. Oh man, look at that market. No, what's crazy is, every single morning all it takes is just one SMA. That's it. Bullish above, bearish below, baby. That is it. That is it. You don't need both flag. You don't need a bow flag. There could be something moving in the background right now that I'm not paying attention to because I'm just sitting here basically just talking in stupid accents, having fun. But I'm having fun. On that note, I think I'm gonna hit the bathroom. I'm gonna get a coffee. I have another 10, 20 minutes here on the stream before I gotta run down the street to a rental property and meet a plumber. Also, the other week, I actually did some projections on my real estate portfolio. Somewhat, I don't even know how I did it. I don't know what I did, but and then later realized that I gave you guys wrong financial numbers the other day. My portfolio was valued slightly. It wasn't valued higher. My net worth on it. So like the principal pay down was off by a couple grand. So I think you guys might have saw like 914 and it was really like 907 or something. I don't know. But I fixed it, so just an FYI. Not that you guys even who really gives a shit. But yeah, so yeah, we'll as the months go on and we kind of get through some of these remodels and cash flow on some of the real estate investments starts to hopefully come through a little bit stronger, we'll do another new financial kind of projection or whatever update on the real estate portfolio. And then hopefully close out the rest of December strong on the YouTube trading account, if you will. Kind of hoping before the end of the year we start getting some banger penny stocks that I can kind of throw some money on. That would be fun. And then hopefully we at least get one more decent sell signal in the market that then provides kind of a nice swing trading long opportunity on the market to hopefully stack some gains before the end of the year close out. So basically what I'm hoping for is some gosh darn good penny stock momentum picks up before the end of the month is over, and then we go through one more stock market sell off, and then we get a new dip buy opportunity on the market. So hopefully we get some sort of sell off before Christmas. Whether it's a 1, 2, 3%, anything, any sort of sell signal decrease in the market would be great. Arguably set us up for a Santa rally. So whatever the market would want to do is fine. But I mean, basically just fingers crossed, right? Fingers crossed we get some sort of correction. And when I say correction, I mean like just some sort of pullback leading into Christmas to hopefully set up a better scenario for a Santa rally. But if the market just wants to kind of keep chugging, I just don't think we're gonna get something. We're not gonna famous last words, right, Connor? Famous last words. We're not gonna just go up all of December, right? There's no possible way. Famous last words. But no, seriously, I mean, it's December 3rd. The likelihood the market doesn't have, like, the likelihood the market goes up until Christmas without a pullback, like a sell signal or even a false sell signal, very unlikely. And if it does, then that will be one of one of the better stock market short-term rallies I've seen in, I don't even know, 3 years. So I don't think that's going to happen. I think before Christmas, we will see some sort of pullback below our SMA in the short term, providing us a better dip buying opportunity leading into Christmas, hopefully for a Santa rally. Um, so fingers crossed, that's all we can do. I will be back here in just a couple minutes. Alrighty, we are back, ladies and gentlemen, boys and squirrels. How is everybody doing today? That sounds great. We have another 10 minutes here on the stream. Can't say a whole lot's going to happen. Probably not. Mm, No, 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 no. So, do you see what is going on, ladies and squentlemans? See how the old VVIX is broken down. See how the Vixer Magoo never broke out. That is why we are looking for the long bouncer Magoo back up, ladies and gentlemen. This may be the most beginner-friendly stock market stream on the internet. We tell you market go up, it go up. We tell you market go down, it go down. Sometimes a good, sometimes a shit. We tell you don't chase penny stock. What happened? You save money. We tell you the news. We'll say Bitcoin gets above 90K tomorrow. Tomorrow, the news says Bitcoin is over 90K. How does that happen? We tell you you need one line to dictate if things will go up or down, and the news will follow. And the news follows. Right now, the S&P 500 is currently priced around zero point 0.5 standard deviation on the year, which basically means The market is not on sale. The market is slightly overvalued or slightly, I don't want to say overvalued because overvalued is relative, realistically, because is 606 is 600 and whatever dollars on the market or $6,800 on the SPX overvalued 10 years from now when it's trading at 10,000? No. But on the 1 year trend, it's not really on sale. So, if you're dollar cost averaging with if you're dollar cost averaging, is going to buy wherever. But, if you're someone who invests in the SPY and whatever and what have you, then, this is arguably not the time to be loading up your dollar cost average. This would be the time to kind of like, maybe pull back a bit on the dollar cost average, wait for the market to go back to a negative zero point 0.5 to negative 1 to increase the value of your dollar cost average amount. So right now we should, that's that. There's your long-term investing approach for the moment. Damn, dude, we cover a lot on this YouTube stream. I didn't really think about it, how much we actually cover. I mean, literally, we talk about the volatility of the markets. We give you the stock markets. I mean, we cover pretty much every single penny stock. Bitcoin, we don't even need to look at news realistically. Long-term investing approaches, short-term investing approaches. I mean, heck, I mean, swing trading. I mean, pretty much cover everything. So, cheers to that, ladies and gentlemen. That's good stuff. That's good stuff. And the best part is it's never going to change. It's always going to be the exact same, day in, day out, year in, year out. The systems just continue to repeat. I gotta say, today was probably one of the more fun days I've had in a while because there was so much to read, right? There was actually like something to read and like use my brain for. Whereas yesterday was just like, eh, no, nothing to do. Well, it's not entirely true, but today was fun because you saw the SPY and SPX kind of flirting with their 50 SMA. The VIX was flirting with its 50 SMA. The VVIX was flirting with its 50 SMA. So today was a very kind of important day. Though the action of the market doesn't look great, if you will, today was an extremely important day. Now, obviously, retail and the average trader and average, person watching the market. And when I say average, I just mean someone who doesn't watch the systems in the way we do. They might look at this market today and go, what a crappy day. Which, granted, it wasn't a great day, but they might look at the price action and go, oh, lame day, which arguably is a lame day, but it was a very important day. And the reason it was very important is because there was a lot on the table today. A lot of different ways things could have shaken out, right? A lot to read to stay kind of in the right direction of the market. Today wasn't necessarily an easy one. We had a cliff dive to start the morning, which then took us to potential breakdown levels. So we kind of had a mixture of emotions like, do we want to break down? Do we want to bounce? I don't really know. We need some more confirmation, right? So there's a lot of things to read today to be able to understand that instead of breaking down, we're going to bounce the market. And when we were going to get that kind of secondary continuation long part of the bounce, that was built off the VVIX. So today was a very important day, though the action was kind of lame, overall. Also, let me say this. You guys all here pretty much know that, well, let me rephrase that. Think of the days where the market's trending really good or it has really big breakdown or like the market trends down. Pretty much any big trending day up or any big trending day down is usually comes on the day of a market breakout or a market breakdown, meaning like the first or second day of the breakout or the breakdown or the transition to a buy signal or sell signal. Those are the days where the market really trends, right? So what happens is the market ends up doing things like it's been doing here for the past couple days, right? So you see how for the past couple days the market's just been sideways, kind of going back and forth, right? So during this moment, this is where all the traders are like, "Oh, dude, choppy environment, so lame, so boring," which is arguably true. Not, I mean, it does. I mean, these trading days are kind of lame, right? Everybody wants this, right? This is what everyone's always looking for. They want that, right? They want this move. They hate this. But these moves only come at the start of buy signals. That's where the trend takes place because that's the lowest risk, highest reward point. And all the smart people know that, right? So that's why these trends take off right after the buy signal, right? And then a couple days in, chop, right? When most of retail understands what's happened, arguably, right? So, and the reason I say that is because if you look at the market, ready, watch this, ready? So if you look, everything was down, down, false long, back to down, and then back up, crosses 50 SMA, up, one pullback, gone, right? So all of retail, if they wanted to be involved on the good long, they basically had to be buying right into that day, right? And into this dip. After seeing all of this scary downwards movement, they're not likely to participate in that way. So we get long and we rally the market up. They see it's recovering, it's good, and the next shit, terrible, right? So just know that yes, we're not having great price action in the market right now, but A, that's okay, and B, that's because the good moves happen at the start of the buy signal. That's where the big bullish trending moves come. That's where most of the gains will be put on early and often with the transition of markets. All right. So again, it's your job to pay as much and as close attention as you can, just like I did today, on the days where the market is what? Starting to interact with the 50 SMA. So look at, ready? When did the market react at the 50 SMA last? Here, arguably like yesterday and like into today, right there. So all of this is basically stretch run. This is consolidation waiting for trend to catch up. That's all that is. All of this sideways bullshit, that was just to give us time to get the 50 SMA to catch up to the market where we can then decide, are we going to break the market down or are we going to continue the rally up? That's what that is. That's all we're doing, right? So that's why I said today was an important day. It's fun, it's exciting because this is the day where markets might change or markets might continue, right? So you can basically say, like, this is the day that we go to work, right? And then this is the weekend, and now we're back to work today, right? All of this is fun and games for the buy signal. Now we got to decide, are we going to go down or are we going to go up? That's the decision point, right? So we kind of had it relatively easy the past few days on stream because we don't have to say anything. Yeah, markets are bullish, it's going to go up, it's going to go up. Maybe we'll change when the VIX tells us to or the market tells us to. Today was a day where the VIX was kind of signaling, hey, maybe we'll change, and maybe that. So that was it, right? There was where we have fun, there's where we wait, and now we're back to having fun again, all right? That's how that game goes. Every single day, every single year for the rest of me and your life, mine and your lives. All right, I think we'll end the stream there. I gotta go meet a plumber here in just a little bit. Actually, I totally forgot. Actually, hold on one second before I go. We're going to look at a 1 minute volume weighted average price strategy at the break point because we're going to use this all day now as the kind of trailing 1 minute support. So we're going to take the break spot. So that's there. And so this is pretty much the VWAP trend we're going to be following for the remainder of the day, most likely. Oh, down here. And then also I should do the 5 minute, which is all about there. So we're going to I'll just keep it. It's all fine. So that's pretty much it right there. Is that volume weighted average price trend you see right there? That's the trend of us establishing along over the 50 SMA, right? So this is the 50 SMA. We broke it down. We back tested, moved away. We recovered, pop, back test, hold, back test, arguably hold, higher lows, market moving long, back test of volume weighted average price support trend of breakout. So essentially, to keep it as simple as we can, we pretty much would say to ourselves that since the market is above the yellow, that is bullish. And we are now tracking the volume weighted average price of the bullish trend since the break over the 50, right? So we will stay long the market on this intraday easily as long as that trend holds, right? Because that would be the algorithmic computers driving price higher after we established the long bias move over the 50, et cetera, et cetera, et cetera. So you guys have a good rest of your day, and I'll catch you back